One of the most important aspects of a rule-breaker investing is seeking for companies with broad consumer appeal, names that are so well known that people all around the world are prepared to pay a premium for the opportunity to use their products. Autodesk, NASDAQ, ADSK, was named a foundational stock by Team Rule Breakers, which may come as a surprise. After all, many of us will be unfamiliar with the name. Autodesk's AutoCAD software, on the other hand, has become an industry-standard solution for professionals in the engineering, construction, and manufacturing industries. The big picture possibility. Autodesk had a reputation for being a sleepy corporation until lately. Management had developed a stable but slow business plan for selling its design software under perpetual licenses, which allowed users to access the software for a one-time, upfront fee. Maintenance plans were the company's only source of regular revenue. In 2016, Autodesk, on the other hand, became aware of the optionality of subscriptions, which had been pioneered by several software businesses before it. While investors were initially dubious of management's change as huge one-time contracts expired and revenue growth slowed, the subscription model's effectiveness was soon obvious. Autodesk had a 3-year sales growth rate of less than 3% prior to the shift. While much of this was converted into cash, the company's 20% free cash flow margin didn't make it a particularly appealing investment for those seeking capital appreciation. Over the last 3 years, however, sales growth has surpassed 20%, with free cash flow creation exceeding 30%, figures that would make even the best software businesses, and investors, envious. What's the secret of Autodesk's success? Management has invested in its product suite in addition to repricing its software programs. Autodesk divided its major products into 4 groups in 2020, after years of investing in its development pipeline, to better identify its opportunity set. Offerings geared at surveying, design, and other 3D software with the objective of enhancing team workflow in a traditionally underserved field. Architecture, engineering, and construction, AEC. AutoCAD and AutoCAD LT are Autodesk's main products, as well as a catch-all family name for applications in a variety of industries that aren't particularly addressed elsewhere. Manufacturing, software and engineering tools that assist with operations such as component development, prototype modeling, and data management. M&E, media and entertainment. Creators can use these tools to create animation, effects, and other 3D models to bring their games to life. While the epidemic has challenged every company to reconsider how it serves its clients and its place in an increasingly fragmented society, Autodesk has prospered. Not only did Autodesk maintain its income during the epidemic, but it also managed to keep clients and limit the attrition that other software businesses experienced over the last year. While its net revenue retention rate dropped from 110 to 120% before the pandemic, it continuously kept above a healthy 100 to 110% range, demonstrating the company's resiliency. Why is Autodesk a good investment? Foundational stocks are designed to be a steady cornerstone of a well-diversified portfolio, demonstrating a high level of belief in their capacity to outperform the market. Autodesk hits the mark in these areas. Its long-lasting product portfolio demonstrates how loyal customers are to the company, and the growing use cases for 3D design have underlined the relevance of Autodesk's software across a wide range of industries as the world evolves. Additionally, Autodesk has a competitive advantage over competitors due to its strong cash flow generation, which allows the company to reinvest money in its product portfolio to stay ahead of the competition. We could go into greater detail regarding the company's recurring revenue strategy, but we'll instead concentrate on something we believe is more current, its leadership. Although Autodesk may not appear to be the type of company that draws inspirational executives, Andrew Anagnost, the company's president and CEO, merits a second look. Anagnost has been with Autodesk since 1997 when he joined to help the company migrate from desktop software to online solutions. He is not the company's founder. Despite the fact that Anagnost merely became CEO in 2017, he already has great Glassdoor ratings, with a 95% approval rating and a placement of number 13 on Glassdoor's top CEOs of 2021 list, even ahead of Salesforce.com, NYSE, CRM, CEO Mark Benioff. It's easy to see why Anagnost recommends Autodesk as a foundational recommendation. Finally, Autodesk ticks many of the boxes that investors look for in a company, like producing yearly impact reports, being named number 4 on Barron's list of the 100 most sustainable firms in 2021, and receiving a perfect score on the HRC Corporate Equality Index for 2021. Risks to your business. Autodesk is a fantastic firm, but it's not without its drawbacks. The potential of 3D and other design software has been recognized around the world, and competition has been heating up. Because it has been a long-time competitor to Autodesk, Dassault Systèmes, OTC, DASD, may be the first name that comes to mind for many investors. On the other hand, niche players are increasingly flocking to public markets to eat into Autodesk's burgeoning verticals. For example, recently public Procore Technologies, NYSE, Pcore, provides construction-specific design software, and Unity Software, NYSE, U, has been an interesting potential competitor to watch as it more actively carves out opportunities in Autodesk's core AEC vertical. Investors in Autodesk will have competition everywhere they turn. Additionally, investors should keep in mind that Autodesk's revenue tends to be concentrated in its AEC business, which accounted for more than 40% of revenue last year and accounted for the majority of the company's growth. The focus on AEC is deliberate, and recent acquisitions of project management companies highlight Autodesk's goal to provide an end-to-end solution in this massive industry. However, downturns in this industry category could have a significant influence on Autodesk's results. For the time being, we believe the risk is justified. After all, the market is large enough to accommodate multiple players. However, we'll be closely monitoring how increased competition affects Autodesk's growth and how revenue concentration plays out over time. The ridiculous bottom line. When it comes to defining an excellent foundational stock, Autodesk has nearly all of the characteristics we look for. It has demonstrated financial and product longevity, a trend we do not expect to change anytime soon. Its vast, multi-billion-dollar market opportunity has only recently begun to surface as Autodesk consciously extends its product range, making it suitable for both conservative and aggressive investors.